What is up everybody, Jasker and Dhillon here. In today's video, we're talking about the Canadian real estate market and specifically how Canada is the second riskiest global property bubble according to Oxford Economics. As you guys know, the Canadian real estate market has been on an uptrend for the past 1.5 years throughout the pandemic, appreciating anywhere from 10 to 15% in most Canadian cities, while in some cities even appreciating 20 to 30%. Now, as a consequence, real estate prices went through the roof in most Canadian cities, making it really unaffordable for first-time home buyers to buy their first property and people who already own their principal residence and were looking to buy an investment property to even buy their first rental property. A big factor right now for excessive demand for real estate is definitely low interest rates as well as a lack of supply, making the current real estate prices go up and up and entering the Canadian real estate market in an overall bubble-like phase. Now, Canada's economy is highly dependent on real estate transactions for their GDP growth. However, as of this article reads, it says that global property bubble to correct and Canada is the second riskiest. Global home prices are 10% valued overall, at least the parts where people eat and sleep. Global property prices are 10% above the long-term trend, says Slater. Using price to rent ratios, they estimate the overvaluation rises to 11% for the global index. Not quite the pre-Great Recession high in 2006, but getting pretty close. They estimate the price to rent ratio reached 13 to 15% back then, and now it's sitting at 11%. However, a different set of economies appear to be at a greater risk this time around, such as Canada. Canada didn't experience much of a real estate price correction during the Great Recession. The legend is this was due to the prudential lending from their banks and rock-solid valuations. That's not entirely true. This article argues markets like Toronto hadn't recovered from their previous housing correction by then. On an inflationary adjusted basis, it was cheaper to buy in 2006 than it was to buy in 1990. It didn't crash because it hadn't recovered yet. Toronto, it is about a fifth of the country's economy, so the legend became that Canada is bulletproof, even though that wasn't the take of the current central bank governor back then. So basically, Oxford Economics is arguing that real estate prices are overvalued and in a bubble-like phase all around the globe. However, the Canadian economy is the second riskiest right after the Netherlands. And if we take a look over here, the firm ranked markets by their aggregate risk score, and Canada landed the number 2 spot. It sets off alarms in 3 of the four key areas of overvaluation. Only mortgage credit growth didn't trigger a warning. Now, if we expand this particular graph over here, Netherlands sits in the number 1 spot, and its 4 key main metrics that they analyzed this on was price versus long-term trend, price to rent ratio versus long-term trend, mortgage credit in GDP, and price to rent ratio as of 1990. The Netherlands sits at number 1 spot at 14.3% at price versus long-term trend. Price to rent ratio, Canada is at 9.4%. Mortgage credit growth, Canada is sitting at a great spot. However, we'll take a look here at another article that it does not give this clear picture as they're showing in this particular article. And price to rent ratio, Canada is at one of the top highest spots, increasing now over 300 points. The lead economist for Oxford Economics concludes by saying that he's warning the risks from the global home price boom are either overheating or a bigger price crash. Overheating would mean that home prices push even further from fundamentals. That would make even larger bubbles that we're currently seeing, and larger bubbles require more economically destructive corrections. The economist, however, believes in a correction. It is the most likely scenario. Our long-run assessment of the current boom suggests that the risks are titled to the second kind, a bigger price reversal. Stretched valuations make it difficult to see more price growth, the firm said. Duration dependence is also becoming an issue. That's the technical term for the longer an issue is delayed, the higher the probability it will occur. In other words, a price correction becomes more and more likely. So there you go. Now, it's not only a few Canadians that are arguing here and there that the Canadian real estate prices are overvalued and it seems like we're in a bubble-like phase now. Oxford Economics, one of the leading institutions in research for economics, is also saying that the Canadian real estate prices are also overvalued right after the Netherlands. Well, if we look at my experience for the past 1.5 years, we've seen bidding wars, we've seen over-asked offers like a normal trend here in Canada, a lack of inventory, excessive demand, prices increasing anywhere from 15 to 20% in mostly all Canadian cities, and people who were looking for properties not even finding their right one. A bubble-like phase forms when property prices just don't even make sense anymore. Well, if we take a look at more metropolitan areas such as Toronto, such as Vancouver, we've seen plenty of examples of properties going for or even $500,000 over ask, and I've seen a few examples of properties going even $800,000 to $900,000 over ask, where the listing realtors listed that property under market value intentionally just to set more bidding wars. Now, the point that Oxford Economics makes on this particular metric being mortgage credit in GDP from 2017 to 2021 percentage points change being at 2.1%, being at a healthy level, I would have to argue against that, because as you guys can see over on this article, it mentions that Canadian banks see the number of mortgages rise at the fastest rate since 2014. Let's actually take a look. Mortgages aren't just getting larger, a lot of more people are taking them out. Canadians have been taking out new mortgages at one of the fastest rates ever. CBA members, which hold most of Canada's mortgages, reported holding 5 million mortgages in April alone. This is up 0.5% from the month before and 2.5% up from last year. It's not the fastest growth that the market has seen, but however, it's the fastest rate seen in a long time. So there you go, more and more people are taking out mortgages, and even the size of those mortgages is increasing, pointing out to the main point that I made in the beginning of this video, being low interest rates being the biggest driving force of the excessive demand that we're currently experiencing. Individuals that already have their principal residence considering buying their second home or even their first investment property just to lock in that 1.5 or 1.6 interest rate that's currently in the market, and people that do not even have a house and they're first time home buyers just considering buying their first house, again due to the low interest rates and the pre-qualification that has already been made. Now, to reinstate my point on the whole Canadian real estate market situation, this article reads, global real estate prices grew at the fastest rate ever. However, Canada grew 3 times that rate. The difference is Canada's record growth is more than 3 times as large as other advanced economies. It would be less of a problem if Canadian home prices hadn't grown over 7 times the rate since the Great Recession. Canadian home prices increased at a rate that should have set some alarm bells off. However, inflation adjusted home prices increased 8.8% in the first quarter of 2021 alone, and now compared to a year before, prices are 20.2% higher and have increased 123.8% since 2005. The annual growth is the largest rate we've ever seen in Canada, with data going back till the 1970s. Now, if you're more of a depictive person, this graph is everything that you need. The black line is global real estate prices and the red line is Canadian real estate prices. And as the article mentions, after the first quarter of 2005, it has been an exponential growth for Canadian real estate prices compared to the global trend. Alright, that was it for today's video. Hopefully you guys did enjoy today's video. If you guys did, make sure to smash that like button, as that really helps me out a lot to reach out to more and more people like yourself. And let me know in the comment section down below, what do you guys feel of the whole bubble-like situation that we're experiencing here in Canada. But that was it. I'll see you guys on the next video on the tripod.